switch that to a red pen. Yeah, now it's okay. So we're talking about money and trade management. For everyone who doesn't know us very well, you're more than welcome to check our website, g6trading.com. Check our blog for all our trades, and this is mainly our contact numbers if you want to contact us by phone or by email. Let's get going to trading and to learn some stuff about sizing. So in G6 trading room, we are using R's. I'm getting a lot of questions. What is an R and how we calculate it and how we use it? So today we will basically have three parts of this lesson. The first one will be about position sizing and why it's so important and how we do it. The second part will be about statistics, the importance of statistics, the importance of how we use statistics and how important it is to count on your statistics for trading, for profitable trading. And the last part will be the trade management. I know a lot of you might think that trade management and money management is basically the same, but it's not. They are totally different two things that a lot of places and a lot of books basically consider as one. So what is an hour, guys? An hour is simply a risk unit. It's the amount of dollars that you risk per one trade, per one investments, or whatever you trade. We are day traders, so we risk the same amount of dollars every trade we take. The size, as we will see, is the one that will be changed according to your stop or to your risk. So an R will define the risk unit, and that's what we will look at. At the G6 trading room, we basically looking or talking only R's. That's what you will hear in our room. That's what you will read in our blog, in our newsletters. Why do we do that? Why do we talk about R's only and not talking about dollars? You will never see a marketing from us like saying, hey, you will make $3,000 after the first months of trading. No, we are using R's to basically to try and get all traders at the same level. It doesn't matter to me if trader X that is sitting in the room is a very experienced trader with a 10 years behind him and a 50K account is trading an hour of $1,000, or there is a trader Y that is a beginner and trading an hour of $10. Because at the end of the trade, at the end of the day, they should both make about the same as if they're trading the same trading system and the same trades. Of course, not everything could be the same, and we will talk about it, but that's basically the idea behind using R's. It will change the way you think using R's, and we'll see it in a minute. So here are two trades from yesterday. That's a trade that we called in the room. That's a Qualcomm, and that's a picture you will see in our blog from yesterday. We made 2.2 hours on this trade. The Qualcomm was called under 68, and look at the stop. The stop was 20 cents. This is our exits. This is from our real life trading account. All our exits are from real life trading account. So if you risk 20 cents and you got a trade here, and that was the 20 cents, the entry here is 68, and the stop was the high of the day, you got 2.2 hours on this trade. But this slide, can you tell me what changed dramatically? Why do we see 4.5 hours? We have the same exits and exactly the same entry. What is seen, guys? Why do we have double the hours, but we basically get the same exits? Yes, Nana, you're absolutely right. Yeah, exactly. The stop is not the same. The trade was called with a 20-cent stop. But look at this. There was an option also, and that's aggressive um, trading than what we did. We took the stop at the eye of day. That's more aggressive, but there are some traders that can say, hey, you need to risk only 10 cents because above this candle, you don't want to be in anywhere in this trade, so you will risk 10 cents. And look how it changed dramatically the trade. Okay, so the way you think with when you think only hours and you don't think dollars can help you a lot during trading. Okay, because you don't look at your dollars, there is, and that will come later in the trade management part. When you don't talk dollars, you don't look at dollars, then basically at the end of the trade or at the end of the trade you look at your account, you just know that you lose 1 hour, you did 3 or 4 or 2 hours, but your mind is focused on looking at the risk first and only then look at the reward. Position size and use in an hour. Now, when the world of defining hours as a risk unit revealed to a trader, to a young trader who didn't think that before, this is something totally different than what you will know, because when you are using an hour, only then you can basically start thinking about risk and not rewards. Most traders, especially beginners, at the beginning of trading, looking at the profits they want to get rich now, they want to make profits now. But the actual job of a trader is to be a risk manager. It's not to be it's not to look at profits first. You first of all you need to look at your risk. You need to know your risk. At every trade, you need to know when you enter, you have 10 cent stop. Okay, then I'm losing an hour. This is my stop. That's it. This is my size. You don't need to think, hey, this can do 1, 2, 3, 4, and start imagining on your mind that you will do 2,000 or 3,000 or 4,000 dollars in a trade. You need to first think how much I will lose and not how much I will earn from the trade. This is a big sentence, guys. If you have your average, you need to look at the mirror and ask yourself, what's my average loser? If your average loser is below 1 hour, you have a one big hole in your trading, guy. You will never make money if you will not learn to accept your losers, and we will talk in a couple of slides how basically you learn to accept your losers. And that's by learning to accept your strategy, to trust about your statistics, about your strategy. Okay? But if you will not learn to love them, okay, and to cut them, remember this sentence here? The elements of good trading is cutting losses, cutting losses, and cutting losses. If you will not learn how to do it, you will never make it in trading. Never have an average of less than of below than -1 hour. Okay, it needs to be lower than -1 hour, but never above it. So how do we calculate R? There are actually two ways to do it. The common way, or what we use in the room, is to use the same R for every setup. It means we have a G3, a G4, a G5, it doesn't matter. Or if you have a scalping strategy, that you will call it XYZ, the setups. So on every trade, I risk an R of 200. Yeah, not all the numbers are 200 exact. Why is that? Because basically when you do the calculation, you take into consideration slippage and also you don't want to make your table too big. I mean, you don't want to take 21 cents, 22 cents. You don't need every cent to count. You take some differences And of course that as the stop is getting smaller, then you can allow yourself every 1-2 cent to calculate. So you take about between 180 to 220, okay? And then you risk about 200 hours with slippage and everything beside that. So if you know, like today we had a spready stock, we said the stop is about 25. You can size it 30 because of the spread, or you can size it to 25. It's up to you. So this difference of 100 shares can make, it will not make a huge difference. The second way is the more, I would say, a little bit more complicated to understand, but it's also something that you need to think about it when you start to be more and more experienced. And that is when you learn your strategy and you learn what works best for you, is then you start giving category to your setups. Like, for example, and this is example only, category C will be 1 minute G1 to G5. It means that you looked at your statistics and you saw that 1 minute G1 trade on a tier 1 gap, for example, in our strategy, work less than 2 minute G1, let's say here, okay? 2 minutes G1. So what I will do, I will call A trades, category A, and C trades, this kind of trades. And on my best setups, I would be bigger. That's the whole idea. Be bigger on your best setups, on your A setups, okay? Be bigger on the setups that give you more profits. The setups that are less profitable, but still are. So let's say this is working 50% betting average, okay? And this is working 70%, so here you want to risk your 200R. Okay, here you want to risk less. It doesn't have to be 100, which is half size. It can be 150. You can do 2 categories and not 3 like here in the example. It's totally up to you, but this is the other way to be bigger in your A setups, on your best setups. But in order to do this, of course, why I said it's not for beginners, because you need to know your statistics for 1 year, 6 months. You need to look back and see, hey, those are the things that work best for me. Those are the setups I want to be big at. Now let's talk about statistics. Why is statistics so important? Why do you think, guys, statistics is so important in trading? Do you think math is so important? Do you think keeping a trading journal is important? Or do you, I know that at the beginning everyone tells you to keep a trading journal, and most of the traders, I would say, look at this and say to himself, hey, I don't need that, and etc. So I will talk about it, Ronnie, in a second. Juan, for your question, how much of the account must be the size in money? It really doesn't matter. We are, for example, we have a prop trading account, so with 3K in the account, we can have a leverage of 60K, 70K, so we can risk $100, $200. Because of the leverage, the amount of cash in the account is not really important. I would say that the most important thing is your experience and your level of trading and where you're at. I would say start from 30, 50 hours on your account, and you'll see that you are doing good for 1 month at 30, get it up to 50. Don't jump or like to double it on 1 month. Only for question, we'll see in a couple of minutes what's important to keep in your strategy. So statistics is very important. Knowing your data, I think for me, that was life-changing when I started counting or trust my statistics. Trust your statistics. Know your strategy. And why it's so important? Because When you will have a drawdown, and you will have a drawdown, okay, and you will have a losing trades at some point. Everyone has. No one has a trading strategy of 100% betting average daily or trades, and we will look at the difference in a couple of slides. Okay. Then if you will count of them, you will have that peace of mind you need for trading. Okay, you will be more comfortable on taking the appropriate risk when you will start counting on your statistics. Okay, now you need to understand that you need to look at yourself and ask yourself, 2013 is almost over. What did I do in 2013? Where was I? Do I have a training plan? Do I execute it? Do I totally trust it 100%? If your answer is no, then you're probably doing something wrong or you have something wrong. Look, in our seminar, in our training room, I'm telling to the guys every time, I can train like 20 guys on something and to give them the strategy. If they will not take it and know the strategy, will just try to copy it from us, just to sit on the trading room and just try to copy a strategy that is working. We will look at our results in a couple of minutes, okay? Then you will never make it. And why is that? Because let's say you enter the room on Monday and that was the big losing day of the month. Okay, so you start feeling emotional or part of trading. You start to be very emotional. You take too much trades and then you make it, instead of 2 hours day, 5 hours day. That's it. Your statistic for the whole month will be totally different. If you will not count on your strategy in 100%, you will never make it. No one, no matter how much we believe we are smart, every one of us is an emotional person. Okay? Including subconscious. And they are very much part of decision making, and everyone who's day trader here had been in that position that he started trading and started losing and then taking another trade and losing and another trade and losing, and then looked at himself after 1 hour of trading and asked himself, where was I? It wasn't me, it was someone totally different that was trading. And that's because no one can control at 100% their emotions. But if you will have a strategy that you will trust in 100%, you will have that peace of mind for trading. For me, it took, guys, about 5 years to get to the point of that peace of mind where I am today. I did good at the beginning, then I lost a lot of money, then I started doing money again. But today I have one strategy and one strategy only that I'm trading. I'm not taking anything else. And I'm willing to sit an all day without taking anything. Okay, and still I trust my strategy in 100%. I know that if I will do the same thing over and over again, this is the result I will have. This is a guy that took the seminar about 2 to 3 months ago, and look at this account. What is the R here? What do you think, guys? What is his R? Okay, the R is here is Clint. You want to answer? 100, yeah. The R is 100, no 500. But look at the biggest thing here. The biggest thing here is the losing days. Losing days. Look at this. $47, 10, 67. Okay, and look at the winning days. 70, 200, 300, 200, 250, 480. I will tell you two things here. One, amazing betting average on Italy. It means that he lost 3 days out of I don't know how much its days are here, didn't count, but it looks great. It looks fantastic. And pulling out money off his account, $2,000 here, great account, great money management. Cutting the losses short. Um, yes and no, Grant. For these results, you need basically two things, and that's what we'll see in the next slide. Our statistics is one, even if you lose 1 hour and you have a 50% or a little bit higher betting average on trades, you will get to these results easily. But you need to be, this guy is like a robot, okay? This is really, really like taking is like trading on one strategy, the strategy of gap trading, and that's it. He's not looking anywhere. And he's so commit that he's more commit than me, really. And Ron is making sure every day to talk to him and tell him he's doing great. Okay, so the strategy is to trust your strategy. And take a look at our blog. Go to the category of monthly results. This is our averages for a year. A lot of people ask me how much money will I do if I will trade the G6 trading method. I tell them, first of all, you need to tell me how much money you want to make. Okay, you want to make 23K a month? No problem. You risk 1,001K per trade. We average 23.85, around 24, let's say. That's what you will make gross. Okay? And when I look at this, I know in my mind, at the back, in my subconscious, remember we talked about subconscious, I know in my mind that I'm doing it. And there are people here also that in our room, and I'm sure they will tell you that when they trade, when they take a trade, they will know that I know that in 45% it will be a loser, 55% it will be a winner. But they know, and I know that on the big trades, we will do 4, 3, 4 hours, 2 hours, and we will do great, and the hours adds up and get to this at the end of the month. Okay? Look at this also. We are flat 4.4 on average of the days. We don't call anything. We don't trade. It means that we sit in the room for all day long and we don't call any trade. We don't trade anything. Can you do that? Sit in front of the computer and not trade. And that's trust your strategy 100%, okay? Because there are some guys that will do the seminar, will sit in the room, but if they will not be commit to the trading strategy, like this guy, they will not be able to get to these results. Why? Because this will be one, okay, because they will never be able to just sit on their ends, and that is. I don't have a daily risk. I know I trade about 2 to 4 hours, 2 to 4 trades a day on average, Vitali, and I know that I have about 55% betting average, so usually it's very hard. I don't even remember when there was a day that we lost all 4 trades. Okay, so usually after 2 trades or so, I will maybe take half size or something like that. And now I'll switch the mic to Ran, unless you have questions about stats and ours. Ran will talk about trading management. But if you want to shoot me some questions first, I think it will be good to separate between the two. Just a reminder, we talked about hours and money management and how to size and some different and some different possibilities on how to do it. And now we'll talk about more the sides of the trade management. I'll see some people writing, so we will wait um, 2 3 seconds to see if someone has a question. I First of all, it's very hard for me to compare to forex because I don't really trade forex, and I'm not really aware of account sizes and how you risk everything there. But an R is basically a stop. You still have pips, right? For every trade, it's like cents. It doesn't really matter. But you can't really compare it. It's not the same. The R is 1 hour. That will be the same. No problem, Bill. Okay, so I'll just switch to one.
Hey guys, just to make sure you hear me, we had the sound check earlier. I know you can hear me, just to make sure. I'm not talking to myself. Thanks, Yaniv. And the next question is, and Grant is asking, hey Clint, is asking what's my R should be, what size? Okay, so how much should I risk per trade? And if you want to look at the rules, the dry rules, if you open a trading book, it will tell you 1 to 2% of your account. But this is your real money, your capital, not the margin. Okay, so I have a 300,000 buying power. No, you cannot risk 1% of that. If you have a $5,000 account, you should be risking not more than $50 per trade. But that was right when maybe you had a retail account and you needed to have 25K to start trading. You know that today some companies, we too, we offer a trading account with starting only with $2,500, so you can risk more than $25 per trade. The R amount should be, and I say that all the time in the room, the R should be an amount, listen to this, that you are willing to lose, okay? Hey, are you crazy? Yes, willing to lose per trade, okay? And I say that every day, every seminar that I teach. Willing to lose. What do you mean willing to lose? When I'm not willing to lose, right? But this is an amount that you know, as soon as you press that button, you know that that money is gone. It's no longer yours. And you need to be happy, if you can say happy, okay? If you're going to lose it, you're not going to go crazy or it's an amount you are comfortable with. So if I will risk $2,000 per trade, as soon as I press that button, my whole body will ache. Okay, I will be shaking. So I cannot risk 2,000. You need to find the amount that is right for you. Don't copy others. Don't try to get rich faster. Okay. It has yeah, I like that. Acquire the skill of accepting the risk. You need to love your losers. You need to love your R. I'm gonna lose $50 on that trade. You press the trigger, and we say in the room, set it and forget it. So, and you always know if you do that, if you come up with the right number, sometimes you risk 50. And I remember as a beginner when I moved from 20, I jumped to 100 immediately. From 20 to 100, I need to get it. I need to get it. So from 20 to 100, and then as soon as I pressed that button on $100 risk, I was all shaken and I managed it terribly. So you need to come up with the right number. And it cannot be too low also. You can't do $10. I don't give a damn. $10, let it stop me. That you need to have the right amount, and you know exactly what I'm talking about. If your body shakes when you press and it's $100 risk, you're trading, you're doing something wrong. Find the number that is right for you. Okay? So how do you manage your losing trades? When you open your, and I'm going to show you something shocking at the end that some of you saw already. How do you manage your losing trades? Guys, this is the easiest part, really the easiest part. As Yaniv said, when you open your trading log, all you need to see, when you look at the losing column, you should be seeing only losing trades that are 1R or smaller, okay? 1R or smaller. So you set up an amount, $100. All your trades should be $100 or less. Well, sometimes, right, There's slippage, I'm not talking about commission. Commission is something else. Commission, that's my business expenses, I put them aside. When I size it before commissions. So sometimes I know the slippage and I didn't pay attention. So maybe I got 110, I got 10%, 15% more than what I should have, and that's fine, okay? But other than that, your losing trade should be under 1 hour. How do you manage your winning trades, okay? And this is really the key, because as I say all the time, same trade, many different results, okay? So what I want to show you here is I want to ask you a big question that I ask many times. If imagine we took a trade right here, we took today, DSW or whatever. We take a trade, we call it in the room, we put the numbers in the room, and then power went off and everybody has been logged out from the room and everybody's trying to log in and cannot. At 3:30 or 3:45, we get the power back and everybody's logged back to the room. Same trade, everybody got in the same entry, same exact entry, and we had 50 people in the room. How many different results we gonna have? So some of you can type 50, and yeah, but we're gonna have somewhere between, I would say, 10 to 20 different results on the same trade, guys, the same trades. Some of you managed it perfectly, and some of you managed it not the way they should. And I'm gonna talk about what methods we use and what are the options, basically. So same trades, different results. Look at this. This is a trade we took, I don't remember when, last week. This is the WAG, and this was first entry. You see this? This is the first entry. This was based on the 2 minutes here. So that was a 2-minute G3. We took it here. How many people got out here? Okay. How many people got out here? You see this slide? This is, sound is okay, yes. So you have to log out and back in. You hear it now. Okay, so how many people? We got the same entry. Remember, 50 people in the room, we got the same entry right here. And then power is down. We come back at 4 p.m. We come back here. Then I ask you guys, how many hours do you have? And then I'm going to have two. One of you will type 2, one will type 5, one will type 7, and then one will say, Nana, where's Nana? She's gone. Nana will say, hey, what are you talking about? I have 10. Okay, same trades. This is a 5-minute run. Yes, this is a 5-minute. This trade was based on a 2-minute. That was a G3 on the 2-minute. But how many results on the same trade? Okay, one will get 2 hours. Now, this is me. I always like to use that. Where's my pen? Just 1 second. Let me delete this. I'm going to show you myself a few years ago. 1 second. You guys in the room, you know me. This is me. Took a 2-minute here. Where's my exit here? Okay, that's maybe 5, 6, 7 years ago, 6 years ago. Taking a 2-minute, it's 9:37, 9:38. By 9:45, okay, I'm done for the day with 2 hours. I'm happy with my 2 hours, so happy. And then at the end of the day, I'm sick to my stomach when I see this. Okay, so same trade, different results. So what are the options as far as trading? You can trail pivots. In this case, if you trail a 5-minute pivot, this would be, maybe this would get you out. Okay, you can use the base and the original stop held, so you have to be in there. And then if you survive, this is the move. So this is trailing by pivots. Trailing the 20 MA. This I recommend mostly to beginners. If you're new to this, you don't really know what a pivot is, you stick to the 20 MA, you can stick to the 200 MA, you can do the 8 MA, any MA that you're comfortable with. This is the 20, I use the 20, it's the same thing. Okay, I use the 8 and the 20. But this is another method, right? Trailing stop. How many of you using trailing stop? I never used it. Actually, once or twice I've used it. I find it, I think it's terrible for me. It doesn't work for me. Trailing stop is just a reason to get out. You're looking for a reason to get out, you put a trailing stop in the system. But it's not something that will keep you in the game or keep you in the trade for a longer time. Okay? Or you can use a smaller time frame pivot, which I'm totally against. I'm going to talk about it on the next slide. Look at this. This is a WAG at 5 minutes. If you entered a 5 minute chart, this is a 5 minute setup here. You take it here, and then what's the number one mistake we can make? And I did that, and I want you to stop doing that if you are doing that. If you take a 5 minute play, the first thing you do sometimes is what? Switch to a smaller time frame, right? 5 minutes, and now what I'm going to do is I'm going to look at the 2 minutes and see what happens there. Well, you're messing up with your brains, right? If you're looking at the five, now you're looking at the two. Why are you doing that? What's in the two? If you enter the five, stick to the five. Don't. That's the number one mistake. Don't go to a smaller time frame. You enter the five, stick to the five. You can go to a bigger time frame. That I don't mind doing. Okay, but I will take it down a time frame only when I'm looking for a reason to get out. So imagine we took that 5 minute trade here. Okay, so when we get to low of the day, okay, that's where I say, okay, you know what? Let's switch to a smaller time frame and look for a reason to get out. Why? Because this is target area. Okay, so when I get to target areas, that's the only time that I will use smaller time frames. So remember, we're trying to teach you here something today. First thing I'm telling you, if you're using a 5 minute chart to get in, don't go smaller time frame after that. Okay, unless you're looking for a reason to get out. Remember, when you go smaller time frame, you're looking for a reason to get out. So this is one thing I have to tell you. So I do not use trailing stops. They don't work for me. I know some of you maybe it never worked for me really, but if it's something that you're working with, I respecting that. I'm respecting that and not telling you to stop. Just didn't work for me. And again, smaller time frame pivots. What we use is I will use the 5 minute pivots. You know me, and sometimes you will have to see through a rally. Imagine you took it here as a short. You have to see through a 5 minute pivot, and that's painful to watch. How do you avoid that? Don't watch it. How's that? I had somebody here with me today, and I said, "Hey, stop looking," and that worked, right? And she's here. So I said, "Stop looking at your trades. Just take the trade, set it, and forget it. Put the stop here." And it worked. Did you see it? Reach the target. We took a trade together. And I said, that's it. Our job is done. Set it and forget it. Put your stop and leave. You're done for the day. I mean, the trade is firing you. You're fired. Okay, so I will use 5 minute pivot. That's no secret. Everybody knows that works for me. Today's trade, which one, Clint? The one that we did. I'm going to show you today's trade. DSW, I'm going to show you. It's here. It's the next slide, I believe. Here's the next trade. I always like to come up with the stuff from the same day. Look at this DSW. What's the setup? Well, some of you don't know, but this is what we call a G3. Okay, this is the entry, this is the stop, and we managed it this way. This was target one, $44. That's 2 hours, almost 2 hours, shy a few cents from 2 hours, but this was jumpy. Yes, exactly. But I size it accordingly. 2.9 you got on this one. No one got more, but I got the same thing, or just a little less than you. But look at this. Let's talk about management. We took it here based on the 5 minute. If you switch to the 2 minutes right after because it's jumpy, because you're looking for a reason to get out, you're making a big mistake. When it's reaching to target 44, that's when I switched the two to the 2 minutes, and I said 44, 44. I don't want to see it printing over 44, and we did take half here. Then second target was somewhere here. Okay, and you'll see an if tickets probably. This was second target. Now what? What do we do now? Well, remember the earlier slide, the previous slide, I said there's a few things you can do. Well, if you use something like trailing stop, you will be out in no time. Really, this was jumpy. You can put a trailing stop of 20 cents, 50 cents. This will really eat through it like it's not there. So trailing stop, I said it's something I don't use. If you use the moving average, look, this is the 20 MA on the 5. If you use the 20, you will be out, okay? You will be out here. Just you measure the 20 MA, you put the stop just above it. If you use the 5 minutes, a 5 minute pivot, and that's what I did, you have to see through a rally. And sometimes the rally can be as big as this, okay? I'm not moving my stop yet. Well, we did in this case, we did. We moved it here. But basically, there's no reason to move the stop on something like that. You are assuming that from here, you will have a downtrend. We never know what's going to happen next, right? But I'm drawing the line between this area and the first attempt between and here and this area, and now I'm saying I want to see this guy trending down all day. So I let it pivot on, and that's where we got out. Okay, that's our stop. It was point 30, I think, something like that. Um, that's a 5-minute pivot. So I gave some back today, right? From 43, I gave 30 cents back. Okay, what is 30 cents in this case? 30 cents is 1 hour. Okay, so 1 hour of freedom. I'm letting the stock having it. It's having 1 hour of freedom. I don't like to give it way more than this. I can give it more, but I don't give it more than that. I won't give it 4 hours against me. Okay, but what I'm trying to tell you, and the next slide will summarize it, is you need to ask yourself a few questions or a few things you need to do. So this is the trade from today. It will be on the blog, if not there already soon. The entry G3 money management. We took half size here, we took another quarter here, and the last route here. It's not a big trade, but it's working 3 hours. I'll take every day, really every day. The next slide is, remember, same trade. So DSW, how many people took it in the room, doesn't matter. How many results? If 10 people took it, we can have up to 10 results, okay? Today it's, well, people trying to follow me in the room, and we're probably going to have the same, more or less, 2.9, 2.7, 2.8. You get the point. But what you need to do is find the trade management system that is suitable for your trading style. If you're, well, I'm not talking about forex. Let's say we're talking equity market. If you're trading, if you're a scalper, don't use a 5-minute pivot, right? But if you're trying to ride trades uh, for a longer period of time, for me, until the market kicks me out sometimes, 359 trades, I call them, until the market tells me, hey, mister, you have to get out. This is time's up. So I'm giving it as much room as I can. So I use the 5-minute pivot. But ask yourself, am I comfortable with the 5-minute pivot? Do I need it? Maybe I can use a 2-minute pivot or a 3-minute pivot. It's very easy, Ronnie. After 2 hours, okay, so we risk 30 cents on that trade. You need to have double than that in order. I'm not here to make to risk 1 hour to make 1 hour, right? So after 2 hours, okay, but this is good for the gap system. I'm warning you, this is good for gap system. If you want to take an example today, what was the massive winner today that we didn't take? There was no entry. There was a stock today, the new one. Thanks, Fabio. The new one is a stock that is moving 30 cents per day. Per day. Today moved $1.50. Okay, and I trade gaps, and I trade only gaps. Why? Because of that. New one is the reason I trade, not new on the specific stock. But the fact that the gappers, the gaps, are paying more at the same day that they're gapping, way more actually. So you need to find a trading management that is working and suitable for you. So I found out with the time that the 5-minute pivots works the best for me. Okay, we didn't, I just said we didn't. There was no entry. I looked at it at the 1-minute time frame, and then I saw the first bar, second bar, it was gone. There was an opportunity later that I said I missed or was too slow. We didn't take it. I can tell you from here until tomorrow, I took it and I made 10 hours 15. But it's one thing we don't do. We don't come up with the trade that we didn't take. One entry. We talked about it during the recap today. So ask yourself, what am I going to do from now on? How do I manage my trades? Maybe you have a system that is working, so keep doing it. Perfect. Now you have to have it in writing. Please don't get lazy and say, you know what, half an hour, 1 hour, I'm going to take it. Please put it down in writing. If you're lazy enough not to write this, you shouldn't be trading. Honest to God, you shouldn't be trading. If you cannot put in paper a trading plan or money management or both, you should have both. If you cannot write down the simple money management rules, you shouldn't be here, really. You shouldn't be trading. So money management plan. I'm going to take a stop with the 20 cents risk. If it's going to print 30 cents, means 1.5 my risk, I'm going to take a third. I'm going to take half. I'm going to take the whole thing. If you're a scalper and something moves in your favor, an hour and change, I know you move your stop to break even. Please write it down. You have to. You want to share it with me? You want to send it to me? I'll be more than happy to look at it. I'm going to give you my email soon. So ask yourself, what's my money management? Write it down, put it in writing. Now, this is the easy part. The easy part is to write it down. What's the hardest part? The hardest part is, can you guess? Well, it says it's right here. Yeah, to do it, Bill. And I'll tell you about myself. A few years ago, I took a trade, not working. Took a trade, not working. Took a trade, it's working. What did I do? Kill it after 1 hour. Why? Now it can pay for the other two. And guess what it did after I killed it after 1 hour? It gave another 6 hours. So you know what? I promised myself, tomorrow I'm not going to do that. Took a trade 1 hour. Took a trade 1 hour down. Took another trade, it's working. Guess what? I killed it. Okay, why? Because I want to be break even. This if I'm gonna be even green for the day. I looked at my P&L. Oh, I'm green for the day. Let's kill it. So you need to stop making decision. I know that's the dumbest sentence in this presentation. You need to stop making decisions that are based on emotion, or it's the same thing. Earlier trades. Okay, it's the same thing. So I used to do that and I stopped. I just stopped doing that because I realized that if I'm going to keep doing the same thing again and again, nothing's going to change. I'm not going to make it. Remember, one trade, many different results. Many different results. So especially when you come up, when you come after a loser or two, that's where you tend to manage them differently. Okay, so how can we overcome this? And there's no slide for that. We're going to talk about it next week. We're going to talk about facing fear and money management. We're going to go deeper into money management. I'm going to continue next week. But how do you do that? One of the rules is don't look at it. Remember, we talked about it earlier. And uh, the girl that was here today, she said, "Hey, look at the trade we took. It doesn't work, or it's coming back to enter." I said, "Why are you looking? When you're looking, that's where you start messing up with your head." First target 2 hours is the best result. Not the best result. You know what, Ronnie? I'll tell you something. For me, I take half, not the whole thing. Take half. We take half off on it. The rest, I want to let it run. There's a guy that worked with me and he's not in the room anymore. Send me an email. Thank you very much. I appreciate your help. You guys are the best and so on. I'm on my own. I don't need you anymore. What is he doing? Here is his money management. He took a trade. Let's go back to our slide. This is how we would manage it. Look at this. Here, the same guy is not here today, but he wrote to me and he said, I recommend you. He wrote to me, I recommend you to test it. It's working amazing. What does he do? It takes a trade. Let's pretend he took the TSW. No partial until the first pivot. I swear to God. No partial until the next pivot. The first pivot. Where is the first pivot? Here. Okay. First pivot, then he will take something. So he found out with the time that works the best for him. Okay, for me, I know 2 hours half. Another 2 hours, I can take a quarter. I can trail pivots. I have a very simple money management plan and trade management rules. Really, as I said, this is the dumbest sentence. Stop making decisions that are based on emotions. We're going to continue from here next week, guys. Okay? Emotions and fear we're going to talk about next week. Okay, but now it's your time to ask a question. That's pretty much the presentation. We do have a few more slides here that are regarding the seminar, if that's information, if you need that. So coming up next week, set up the calendars there. We're going to be talking, yeah, emotions and fear. We're going to talk about this next Tuesday or Wednesday, I'm not sure, but just follow us on Facebook or the website. You can always find all the events and everything. Christmas party is coming soon, and it's going to be a lot of fun. Did you try not taking profits at all until the end of the day? It's easy said than done, Ronnie. I never tried. I couldn't. I never tried. I couldn't. But I will give you methods, Ronnie, if you'll be here next week. I'm going to give you a few methods I've used. I told Milo today, I used the walk the dog method. What is walk the dog method? I took a trade. Let's go back to the DSW. I took a trade here. And I know, Ronnie, I know myself. I knew myself 7 years ago, 6 years ago. I knew that if I'm staying here, what I'm going to do is I'm going to destroy the trade. I'm going to take half here, and I'm going to take the whole thing here, and I'm just going to be sick to my stomach in half an hour. I knew it. So I used to take a trade, put the stop, and walk the dog. Okay, just walk the dog. Just go out for half an hour and come back. I just couldn't take it. I couldn't watch trade. And I had to act. And one of the things is just you cannot be here. You're doing stupid things while watching the trades. You bring the champagne. Okay. So again, so next week we're going to talk about fear. Still under the umbrella of money management. We're going to talk about fear and emotions and whatnot. So questions, guys, before I let you go. Seminar is this Sunday. There's still a few spots left. If you're interested in this, this is what we teach. We go to the basics. We talk about gaps. We rank the gaps, tier 1, 2, and 3. And then we teach how to enter them. Why we call ourselves G6? Because we have 6 setups that we use, and that's very simple. And of course, we do teach money management and psychology. We will have a Black Friday special. Hey, these are the dates for the seminars, by the way. December 8th and 1st and 8th, 9 o'clock Eastern time. You get a manual, you get 4 months to the room, and you can always retake the seminar and a career, obviously. How do you find the trades to take? We basically, I use a scanner, but Yaniv uses Finviz. I use a Stockbox. Even in DAS, I know you use DAS. In DAS, there's a scanner, a built-in scanner that can actually shoot the gaps for you. These are, you're the first one to see it, but we do have a seminar special for Black Friday. So you get the gap seminar and the fade book, a combo. That's what it's going to cost. With a few months to the room and whatever I mentioned, this you will see in your email soon, but you're the first one to see it. That's our Black Friday special. Still a few spots left for this coming Sunday. So I want to finish with giving you my email, and really feel free to shoot any question, anything you want to know. And if you want to call me, go to that website. There's a phone number, North America office. That would be me. Feel free. Anytime, really. Questions, guys? Anything? You had some good questions going here. And we're going to meet again next week. It's been an hour since we started, almost an hour, and it's always a fun and pleasure. So again, if you want to talk to me about, hey, Oni, good night. Anatol, good night. And if you want to talk about your trading career and how next year can be different for you, call me, please. Let's talk about it anytime. And if there's no questions, thank you for coming. Thank you for listening. We're going to continue next week. Hey, Clean, thanks. Good night. No problem. There's more good stuff coming at you for sure. How much time it took me to become a pro? 3 years, Ronnie. 3 years. I can tell you. There's one thing I can tell you. If I had somebody like me 2 years ago, after the first year that I traded, or even few months after I started trading, I would be profitable many months before. Okay, so this is a huge shortcut. Okay, Remember, we teach how to trade and not just what trading. We're not going to show you, hey, this is bid and ask and this is spread. We're going to teach you a method how to trade. This is a tier one gap. This is how you trade it. This is a tier two. This is how you take it. What time frame to use and so on, and what's the setups we use. So again, send me an email, chat with me, anything you want. Here's my phone number, by the way. And if you need my cell phone, you'll get it as well. We are a family and we'd love to have you with us. But again, send me a Milo. Good night. And you can always send me questions, anything you want. You want to share your really anything you want to share. I'm here. Hey, see you in the morning. Tomorrow is the last week, the last day of the trading week. Okay. So take care, guys, and I'll talk to you tomorrow in the morning.